All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, March 20th, Fed Day. So, a lot of things to go over, a lot of moves to go over. Usually on Fed days, you do get a lot of macro moves, right? Bonds, gold, interest rates, which I already said bonds, but as well as the dollar as well. Those are the three things that I always look at. Of course, equities is going to be in there because that's mostly what I trade, but you really want to be paying attention to what the dollar does, to what interest rates do, and what's the third thing that I said? Bonds, interest rates, which is basically the same thing, the dollar and gold, right? So those are the, it's been a long day. So first things first, before I talk about the Fed and all those moves that happened, because I think there's some really interesting ones. Let's just quickly talk about earnings. It looks like Micron, they were the options were implying a 7% move, and I wasn't really compelled to play this either way. I thought what I said earlier is that Micron is just a little bit too inconsistent on earnings. I didn't think that there was any major edge, so I did not play this one, and I really didn't want to sell premium either. But I think if you sold premium, which is probably not what a lot of people did, that was probably the best trade because it just hasn't moved. A couple other names that reported. I'm not sure why this is up so much. Williams Sonoma has actually come back in. Their numbers were okay. They announced, I think, a big buyback. Guess was another one. They're down. I did not play any of these names. So let's go ahead. So that's the moves. I think the Micron was the most interesting. So the Fed, very dovish, right? So here's what they said. A great time for the Fed to be patient, watch and wait. Fed signals no rate hike this year with one increase in 2020 is what they're looking at. Fed leaves rates unchanged, says economic growth has slowed. So dovish, 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 and more dovish. Now, the market did take off on that news, on the headlines, and then just basically settled back into exactly where we were for the overall S&P. So really a muted response. I mean, this is typically what happens a lot on Fed days, is that we start to go one way. This is what I said. What I normally see on Fed days, and keep in mind I put this out at 1:54 before the Fed announcement, so this is not after the fact. But I said what I normally see in Fed days, and I've been doing this for a long time, a couple fake moves around the announcement and conference. And I said I have learned to not chase initial moves and wait for the market to settle down and then move. Now, if you caught some things today for a day trade, congratulations, because not everything did this, and that's where I'm going to go through. But let's just look at IWM as well, because IWM seems to be the problem child right now. Well, there's a couple problem childs, but keep in mind, biggest component of small caps is what? Is banks. What did they do today? They got smoked. KRE finished down 3.4%. So why did this happen? Basically, my thought is because of interest rates, right? Which I'm going to bring up TLT. Really gave, if we bring up XLF, and I did take a shot at XLF the other day, and I'm out of it now. My stop was 26.50. So once it hit that, I said I'm not even going to hold to the end of the day. But that's fine. Paper cuts are absolutely fine in this game. This was not a big loser. This was not a big position. So false move here on the 200-day moving average. This is going to happen in trading, right? If you're not used to this, then you want to, if you're going to be in this game for a while, you just have to kind of get used to the paper cuts. But you have to react to when you have a stop. So every time I put out a trade entry, right, at the Tribeca Trade Group, whenever we send out trade ideas and so forth, I always put a stop price in there, and you could set that stop price, very important, on the entry and say, so the reason why I'm covering this, by the way, it's good to go over the losers, because really that's how you get good at trading. No one is going to have 100% winners, and it's really to learn from how to handle the losers is the hard part in the game. The winners is the easy part, right? Which you're going to have winners no matter what. Managing them well is also part of the process. But the losers is really where you kind of grow in this game. So, here was XLF. Made a nice move off the 200-day moving average. I did not get into it here. I was waiting for confirmation, which was the 200-day moving average, because this would tell me exactly where to get out. So I said 2650 was my out, and I'm out of it. And over and done with it, and you move on. But, this group has been very, very challenging. And I think a lot of people were talking about call buying in this group, both in single names and in XLF. I think we saw XLF calls about a week ago. So again, I didn't jump on the trade as soon as I saw it. I looked at the technicals and just looked at a level that I could trade against. So, but man, they got hit really hard, and even worse in the regional banks. So it's almost like a relief to me when something that I have that doesn't seem right, or it didn't seem right yesterday, and if it gets the stop, I mean, look at the regional banks; they look worse. And again, that's down 3.4%, closed on the absolute lows on heavy volume. So there is a virgin point of control, probably where we're headed. So I think that's interesting, and then I'm going to talk about the winners and what closed on the highs. But first, let's talk about one of the first things that I look at is the dollar on Fed days, because it will really move around. You can see the dollar closed right around the lows. Remember this virgin point of control that we talked about at 26. Again, excellent for watching where these virgin point of controls are. A lot of time you see the reversion. You can go a little bit higher, but if there isn't one after that, a real big reversal off of that virgin point of control, fake out at the previous high. So we'll see what it does. It's got the 200. It's got the bottom of value, which it did not break. But so you start to think whenever you see the dollar move down, what does that affect, right? So it affects a bunch of things, right? It affects emerging markets. Emerging markets didn't close exactly on the highs where I wanted it to, but it does look like this is trying to break out the EEM. Also EFA, which I was on Bloomberg yesterday. That was the reason for no video yesterday. But I talked about EFA. Fine, finished up 5 basis points, closed off the lows. I didn't do anything, to manage that trade. And then I also look at interest rates. And of course, the dollar affects a lot of other things too. But you could look at the long bond, ZB, or you could look at TLT. TLT is more of a weighted average. But, really this was, we were talking about this for the last couple days, and specifically this morning, we mentioned how the bonds were really coiled. If you look at the move, again, if you don't know what coiled means, it's usually 3 moving average kind of wrapped around or intertwined. And you can see you got the 5, the 20, and the 50. And also look at all these bars, kind of back and forth action, and it seems like they're resolving themselves higher. So once, when bonds rally, that means rate. Remember, it's an inverse relationship with rates. So that means rates are coming down, and that yield curve is getting flatter, or possibly inverted. I didn't check to see, but definitely if long-term rates are going down, that means that the yield curve is getting flatter, and that's harder for banks to make money. So hence, I believe the reasoning why the banks sold off so hard is because they don't want to see the long end of the curve, the rates go up. We were even saying the other day that it started to look like they were going to the downside when the banks were up pre-market yesterday. So again, a pretty decent fake out, I think. But the most all you could do with these fake out moves is control what you control, your risk, your levels, and then move on. And you take shots at some things, but realizing that not every shot is not going to go in or work. All right, so bonds, that's going to then you start to think about utilities. We've seen a lot of put buying in utilities because these really did get overbought. That's the recipient of when interest rates go lower like that. People start to look at equity plays when rates do that. So XLU is usually the first place that I look. Notice it has come in a little bit into support. Breaking out. We'll zoom out of here for a minute. Right, breaking out, and this could actually be redrawn. I'm going to remove this drawing because it should probably go right here. but it's retesting. Oh, come on, Thinkorswim. There we go. It's retesting that breakout area in XLU. So maybe a good idea to kind of get involved. Let's just see where the weekly chart is as well. Yeah, it's kind of interesting level to look at for XLU. Again, if they're going to go up and if they're going to range, remember, don't always, again, videos obviously for information purposes only, but just because you think Utes may be boring, the options are really cheap. So you can make money in utilities trading XLU, because if you look at the implied volatility, which I know some of you don't do, some of you do, some of you don't do probably, it means they're pricing in. It's very cheap to get into things like utilities. I just want to see this USMV, which is low volatility equities, which I didn't get a chance to look at today. Kind of the same thing, moving into support. SPLV is the other name in that group, low volatility equities. Also, a move back from the highs. So, this could be an area to kind of revisit. And if you don't want to trade the ETFs, you could sift through the top holdings and possibly pick out names that you really like technically. But I do think interesting. REITs is the other name, is the other area that these things quietly were all doing very well, and they're off their highs. So you get a little bit of a chance to kind of get something a little bit off the highs. Then, what else that I look at is gold. The gold miners were up 2.2%. I did take a trade today. I kind of waited to the end of the day and added some Kirkland. Like, this is a name I've been watching for a while. Haven't been in it at all. And hit a high of 36.74. I think that was right around earnings, which I'm waiting for that to come up here on Thinkorswim. And then, has done one of these and now into support. So I took a shot at this, on an up day where it's into support. And again, just like with the financials, if it breaks, say, the 50-day moving average, I'll probably use the bottom of value here, give me a little bit more bumper room. But again, good diversification. It's good to have some diversification. That's the other thing with utilities, gold miners. I know everybody wants to trade all the growth names because they're exciting and they move, but it's nice to have a little bit something different like a utility or a gold miner in your overall portfolio, because it really adds a lot of diversification benefits. I see Theresa May is speaking. That could be also why that we got a little bit of volatility. The market is really not liked when these Brexit headlines show up. We start to sell off a bit. So I don't know if that was also the reason for why the market came back in. I do want to look at a couple of the. You can see SPY still selling off here in the after hours. So let me go through a couple of. So those are SPY, IWM. We went through gold. What did really well today? A couple of the internet names did really well today, and there was no, so just like we saw S&P and small caps give back a lot of the initial pop, what didn't was names like Netflix. Netflix closed on the highs. Somebody asked me, because I said, wow, it's the first time it's moving out of value. They said, what does that mean? And I think a lot of my followers at this point know what I'm with, that I'm always talking about value areas. So this is the value area for March. What does it represent? All of February's price action, right? And it's one standard deviation of price activity around that. So why do I watch these? Because they really give some good support and resistance levels. And right now it's breaking out of this. It's been in value all month and now breaking outside. Now we have seen some call buying in Netflix, but it's been a tough trade. There's been a lot of fades. We were talking about this the other day in the trading room, that it maybe because of this Apple video event that's coming up, I think on the 25th, is it? So that, you see a lot of pops and fades. Today it did not do that. Amazon continued to truck, and that's also closed. So internet stocks did very well today. And I traded a little bit of Amazon today, but I got a little bit worried. Where's the 5-minute? I've been trading Amazon pretty I don't want to say intensely, but I've been trading. I've been trading it a lot more now that it's got some momentum to it. But I think right in here, I put on a quick call spread, and I made a little bit of money on it, nothing crazy. But it just started to break down a little bit too much, and then of course it snapped back up. So where is this? So this is getting interesting, and I think at this point, I wait till the end of the week. But Amazon, the level that I'm watching is the 1771, and if we close above it, then you've got a level to trade against. But I'm really surprised that we've gone all the way through, and every day this week it's been up, right? Pretty sure every day this week it's been higher. So basically 45-degree angle to the right, and this is the beginning of this week. But last week it also did the same thing. So really strong there. There was a lot of ETF big blocks going up too. Somebody was doing a reallocation trade earlier today amongst sectors. So for example, you could see this big block here. Somebody went into internet stocks. And I've got the whole list from earlier on my Twitter feed, but somebody sold out of material stocks, right? So you could see this big volume. I'm on the 1 hour bar, but these were about $100 million trades a piece. 2.5 million shares, you could see, right? So we are catching it here on our screens. 2.5 million shares. Also, VAW was also a sell. Of course, this is the pop after, but somebody was selling materials, buying a little bit of internet. XLV I saw a buy earlier as well. This is 1 million shares. So again, some of these are, I know some people like to look at the option activity even when there's a $30,000 or $40,000 option trade. This is a $1 million print in most of these sectors. Sorry, not 1 million, $100 million. Let me rephrase that. So some really big reallocation of some sectors. So into healthcare, into internet. I think VGT was sold. This is the Vanguard Technology ETF. About 300,000 shares. Keep in mind this is a $200 ETF, so it's a lot more notionally. But yeah, let's look at the FTN ETF. This didn't close right on the highs like Amazon and Netflix did, but still is leaning to the high side. All right, so that's some of today's moves. Video is about 17 minutes. I would say the option activity it got really crazy after while Powell was speaking. And I have most of the call activity in here. Twitter, I forgot to mention this name. This is a name that we've been long, that I got long about a week ago. And really nice. I was able to take some targets in this trade today. And then, this is also just like Netflix. Maybe not as clear with this resistance right here, but a nice move outside of value and closed on the absolute highs. So I would look for some continuation there. A couple other names that saw option activity was Lennar, Rig, energy names, which I didn't get a chance to talk about at all, but those also I believe closed on their highs. Not exactly. So XOP still right at that top of value, and it needs to close above there for that to trigger a long. All right, so that's but still finished up 2.8%. I think that was your best performing sector ETF, and there was actually a lot of puts that went up today too. So it wasn't just straight outright calls. And that's why I kind of, in the last hour, mainly sat on my hands. We saw puts that went up several times in Microsoft. Like this one, for example, is $350,000 trade. Oops. Apple was another one that we saw repeat puts. Again, so it just wasn't clean exactly. These were puts that went up versus calls, but yeah, I mean, you could see here, just repeat stuff on the put side. So that makes me a little bit wary too. It doesn't really get me that excited to kind of jump in a bunch of positions when I see a lot of put buying. So we'll leave it there for the day. Again, a lot of moves with FOMC. If you don't need to figure out all these moves in one afternoon, kind of let it sink in a little bit. I did want to just go over the S&P chart. And give my view in terms of, with the trade deal, which didn't get to talk about that as well. That was a whole other thing that needs to happen. My take on that is I think it's going to continue to be bumpy for names that are really, like FDX, which by the way made a little bit of a higher low today, but I think it's definitely going to be a little bit bumpier for names that have more global exposure. I think names that don't have much exposure, the dovish Fed is really going to help. So names like Netflix that has no exposure to trade tensions, I think there's a reason why that closed on its highs and may continue to go. You just don't have to worry about too much in terms of a trade deal. All right, so something to keep in mind. And I think for the most part, we'll probably have a little bit less exposure to names that are really sensitive, considering that it's still ongoing and definitely not resolved. All right, guys, thanks very much. Have a great night.